Avinash, somebody I was speaking with yesterday, and this was a rhetorical question the person I was speaking to put to me. He said, what's really wrong? What's really happening? This entire, not just India, right, but the global economy, the global market, the way it's crashing. What's really gone? I mean, what is the reason? The basic reason. And, and the person I was speaking to said, well, he works on the sell side, and he says a lot of funds that he interacts with also ask the same question. What is really wrong underlying? What is the one event or two events, or what is the trigger essentially?
I think Prashant, one thing which comes to my mind, is with the fall in crude prices.
So that is one. So oil goes down, banks could get in trouble, a lot of financial institutions could get in trouble, right?
Yeah.
With exposure in that sector, right? But is that going to cause a complete a disaster?
I think one is the liquidity.
Is that it, or is there something more? I mean,
no,
so that
is
known,
one
right?
is the liquidity fact, Prashant, and secondly, as I was mentioning to you, that earnings growth for the last 2 years have been more or less back-ended. We start with earnings growth expectation of at least 14-15%, and then those get tempered down. So I think probably FY16 is also going to be a year where possibly earnings growth is going to be largely muted. Again, come FY17. So again, I think until and unless we see a strong revival in earnings growth, especially from frontline, sectors like cement or infrastructure or capital goods. I think especially from the banking sector, both from the PSU as well as from the private sector banks. I think clearly until and unless we don't see double-digit and strong visibility of earnings from these sectors, I think the markets are definitely going to be bogged down. Without earnings growth, which probably most people say stock prices are slaves of earnings. So unless that happens, I think it's going to be a long way before we see a sustainable rise, because obviously regulatory bills like GST, or for that reason the bankruptcy bill, that has not happened. I think there is great amount of...
I'm just trying to put the opposite, I mean, just playing the devil's advocate here, right? And this is global, right? There is about $6 trillion of bonds which are now yielding negative rates, negative yields.
Okay.
$6 trillion. Why wouldn't you think it's possible that portfolio managers or people want more than 0%, -3%, -4%, that wants 1, 2, 3, 4%, something? And there are, if you think about that, there are opportunities abundantly available, those kinds. I'm not talking about large returns, but 4-5% kind of yields available in markets like India, right?
Exactly.
So, I mean, what are we talking about here? I'm just saying, I mean, some of the things about oil collapse and financial institutions getting into trouble, global growth not there, it's been true we've talked about it for 2 years now.
Exactly.
Right? So I'm just saying, is there something which we are missing, which most people are missing? I remember in 2008, by the way, this entire, now of course we call it the subprime crisis, but when it was actually happening, it was already very late into the crisis that we realized that, well, it's this, I mean, subprime, that's causing all of this.
I think 2008 and 2016, Prashant, are definitely different, and I think even if you look at the structure of the Indian economy, we have got very lower levels of current account deficit.
No, each period is different than the one before, in good ways and bad ways.
Exactly.
So let's take that as given. I'm just saying that, is there something which we are missing? You don't think so?
No, I don't.
In fact, all cards are on the table.
Your point is very valid that today also, if you talk about dividend yield as a kind of a yardstick, I think there are fair amount of companies which have actually done well and where there are good opportunities. So India is definitely a comfort, is an ocean of comfort, where even despite whatever the government does, 6 to 7% GDP growth is there. I think we are growing probably as twice as the global growth. So clearly, I think until and unless, I mean, once this global volatility subsides and probably some stability comes back, the rupee has also weakened quite significantly. That is also one more reason. So probably a strong